More on the markets in just a bit, but as Prashant mentioned, we've got some, I can say it's a blockbuster from PVR. I can safely say that because the numbers have been so strong for the quarter gone by. Let's actually run you through and then we'll get the conversation going with the management as well. There's been a big beat on the EBITDA front, on margins as well. Average ticket prices and spends per head, all of them have been above street estimates. Occupancy levels have picked up on a quarter-on-quarter basis. So let's talk about the trends and the sustainability of all this momentum. We have Ajay Bijli, Managing Director of PVR INOX, as well as Nitin Sood, CFO of the company. Gentlemen, good afternoon. Thank you for joining in. And I must say this is, a good continuation and encore because I was here the last time around we were doing this interview. And Ajay, I guess things have only gotten better, you'd say?
Absolutely. Couldn't have asked for anything better because, last year, this quarter wasn't good at all. People were still skeptical about coming out. Movies, I would still say, were not so bad, but yet I think there was still some circumspection from a certain segment of the customers to come out and entertain themselves on the big screen. All that is over now. And now people have come out. We've had blockbusters doing well, and we've also had mid-sized movies doing well. Hindi especially, and also regional and also Hollywood, Oppenheimer, Barbie, Mission Impossible. Then in Hindi, we had Gadar 2. We had, of course, Jawan, the biggest movie, smaller movies like Rocky Rani, even Dream Girl, Fukre. So all sorts of movies, the way they used to work pre-COVID, have worked now as well. So it's very heartening to see that.
Yes, and it's been been in the making for a while now. But, Ajay and Nitin, want to get your sense. We'll talk about the movie, slate and the slate of releases in a bit. But my question is more on the durability of some of the metrics we've seen improving. For instance, average ticket prices have now moved to 276. They were closer to 239, 240 in the last quarter. Spends per head are inching higher and higher, 136 thereabouts. My question, Ajay, is that when you observe customer behavior, do you get a sense that the customer, irrespective of the movie release late, and that's the big, obviously, the big variant there, but is the customer willing to pay more, is willing to go more premium?
Absolutely. I mean, that's why our portfolio isn't one size fits all portfolio. I mean, India is a very heterogeneous, very disparate market. So we have to come out with for a solution for every price point. And that's why the movie Passport that we've also launched just now doesn't address everybody, but it's addressing that Monday to Thursday customer who is price sensitive, but who's got plenty of time at his hand. So I see that all sorts of customers are there and all sorts of offerings we've got to cater to the needs of the Indian moviegoer who still wants to go out and entertain himself on the big screen. So it's pretty sustainable to get people coming. And I've always said that India is a very volume-driven business, volume-driven market. We have so many films in different languages which keep coming. So something or the other always clicks and it gets us above that threshold of occupancies and business matrix, which makes our business click.
Ajay, Nitin, good afternoon. Prashant here. I mean, in those results, you can also count 6 tickets of Oppenheimer from my stable, my
you watched the movie thrice, Prashant, 3 times, no?
Thank you very much.
I watched it thrice, and I took my daughter and watched my wife. So, yeah,
Let's see, a long movie you saw thrice. That's brilliant.
So, Ajay, would you say that, that a few months back, I mean, actually, 2 quarters back, we were having this debate whether it is when things were not going all that well, whether people are now moved to OTT, is a structural kind of a shift away, or is it the movies which need to get better? I think that debate, perhaps with this quarter, in a way, is settled, right? If the movies are good, people want to watch it on the big screen. Yeah. There's no doubt about it. That demand intrinsically is there. You would agree?
Absolutely, absolutely. I think last quarter, lots of things were happening. OTT, the volume of OTT viewership was very high. Also, as I said earlier just now, that there was still skepticism of certain segments of people who are not still coming out. So there were a lot of factors at play which depressed our occupancies. All that is over now. Water has again found its level. People are coming out. Of course, even pre-COVID, they would only come out if the movie was good and it connects with them. People are going out. OTT is still coexisting. People are, sitting at home and watching a TV show as well. They're going out as well. So consumers are not robotic. They're doing what they feel like doing. They've got so many avenues there to entertain themselves. But yes, I think the Bollywood industry, which was really getting beaten up a lot last quarter, has really got its act together as well. And they're making movies for the big screen, and which is very heartening to see that, as I said earlier, even small movies, Oh My God 2, and Dream Girl 2, and even this one, Fukre, Rocky Rani was not like a rural Bharat movie. It was an India urban movie. That's also done very well. So I think the content guys are getting their act together. The consumers are going out. So I think, and they're sitting at home as well and watching. So I think it's the coexistence of various formats, various behaviors, which was prevailing last time and which has come around again. So it's very heartening to see that.
All right. Good afternoon, gentlemen. Nigel on this side. Just to put it simply, I think during the COVID phase, you all were in survive mode. Then it was revive mode. And now you all are in thrive mode because, those numbers are looking very, very good. And maybe the second half of this fiscal as well has good times for you all. So let's get a couple of numbers going, though. There were some synergy benefits that you all have been talking about in the past post that merger. How much of that has been realized? How much of that is pending? So you could give me a number on that. And the second part is the net debt number as well has come down by close to around 300 crores, year to date. That's in this fiscal. Where is that number headed?
So I'll request Nitin to answer that question. Nitin, would you like to talk about the synergies?
Yeah, Nitin, please go for it.
Yeah, so we had given markets a guidance that, ultimately once the integration plays out, we will be able to achieve a merger synergy of approximately 225 crores. And we believe that, 18 months is a fair time frame for us to get there. In the first half of this year, we are in the early stages of the integration process. But I think 125 to 140 crores of merger synergies is already played out. We are reasonably confident, a large portion of the synergies that we were estimating will accrue in the, first 12 months of the merger. So that's progressing very well. I think the second big thing which has happened for us is because the quarter was very strong with healthy cash flows. Our focus is to also, turn free cash flow positive this year. First 6 months have been free cash flow positive after our capex spends. And we've used all the surplus cash to reduce leverage. Net debt is down to 1,100 crores versus 1,430 crores at the end of last year. And third important thing, which, I would also like to highlight, there was a lot of talk about, how the margins would expand on the business. Our average occupancy in this quarter was about 32%, which is similar to what we did in 1920 PVR Inox combined in a pre-COVID era. And our margins this quarter are roughly about 22% versus 18% that we had in 1920. So there is a significant margin expansion also, which is playing out.
Okay, all right, Nitin, give us a couple of more numbers, right? Occupancy, I think you said 30% odd for the quarter gone by. Where do you see that number headed? Where do you see that number headed? And debt numbers come down to 1,300 crores. Do you see further debt reduction?
Yeah, so net debt number is about 1,100 crores at the end of this quarter versus 1,430 crores, which was as on 31st of March. Yes. Our average occupancy during this quarter was 32%. I think that number will continue to vary, quarter on quarter, depending upon content. But I think we ultimately think we should get closer to pre-COVID level occupancies of 29-30%, as some of the content supply stabilizes. We should definitely get there.
Nitin, hi, good afternoon, Surabhi here. Just tipping in with one question on this monthly pass scheme. I think this has generated a fair amount of buzz already. If you could give us some sense, ballpark, what is the kind of revenue accretion that you're expecting from this scheme? And also, there's a bit of a worry as well that could it start diluting margins because, it's a good scheme, you get maybe cheaper tickets. So will it start impacting, average ticket prices on a quarterly basis and margins on a quarterly basis?
Yeah, first of all, I think there will be a lot of such offers that will come out now that we have a large footprint available. The whole concerns around margin dilution, are unfounded because the prime idea of this to increase customer visitation behavior. And as more and more people come, there is likely to be an impact on higher admissions. And we're in a very high operating leverage business. So more the number of people who show up at cinemas, There is additional spends on F&B, advertising, etc. So clearly, we don't see any impact on margins. Same is the case with some of the new stuff that we did in F&B, where we've launched 99 rupee products and unlimited refill on products on the weekends, on popcorn and Pepsi on the weekends, where we've seen a consumption uptake. People have upgraded, people are consuming more, and people are finding more value in those product offerings that we are giving. So absolutely no impact on margin. And the idea is to do more such things which entice more and more people to come back to theaters.
So is the focus on volumes and not necessarily higher value growth? Would that be the right way of looking at it? Because you spoke about F&B spends, these 99 rupee offers. Prashant, I didn't know that. I think I should head to the theaters as well. He's talking about 99 rupee offers. I was unaware. But basically, I mean, to come back to the question, is it more to push volumes now? Is that the strategy?
Both. Can I say that both actually? We need volume and value. And as I said earlier, it's a very disparate market. There is a price-sensitive customer there who also needs to be addressed, and there is a customer who's got discretionary time but doesn't have any problem with discretionary income. He also has to be attracted. So I think we're focusing on both, which is the reason why, as Nitin said, even after having this 99 rupee offer, our ATP, our SPH has gone up by 15%. So it hasn't really put any dent on our F&B spends. So very careful we are in terms of how we are working out these schemes.
Okay. Nitin, and how many of these 20,000 subscriptions are already gone? Would you have the number?
I don't have the number offhand, but there has been a very good uptake, a lot of demand for this.
Okay. And you can expand it substantially. I mean, if this takes off.
Absolutely, that's the idea.
Okay. And Ajay, there is no risk that the guys who come over the weekend who don't mind paying, they in their minds won't get anchored lower, because I mean you can watch 10 movies for 700. Why should I pay
700
very
for
high
one
price
ticket
for one?
on a
You don't think
weekend?
that's the risk, or is that something that's crossed your mind?
No, we've studied all the cohorts, and the cohorts are people who go on the weekends. Because so many combination of cohorts, the data bank that we've got from the consumption pattern that we've got from our database. And we're finding people who come on weekends, they'll stick to weekends only. But there was a customer on a Monday to Thursday who had plenty of time, but he wasn't coming because he was price sensitive. So we're just attracting that. I don't think any cannibalization or any shift will happen.
All right, guys, good luck, and we will speak again soon. Thank you so much for joining us, Ajay and Nitin. Appreciate your time here on CNBC TV 18 as always. Good luck.
Thanks.
More movies, and it's quite incredible the way things have bounced back for PVR in the quarter which has gone by. All right, how should you position